What's going on, everybody? This is Phil from Millennial Money Gains, and welcome back to a brand new video. In today's video, we are going to be doing our weekly portfolio update on the Dividend public portfolio. If you guys are hyped for this video, please make sure you smash that like button and consider subscribing to the YouTube channel. We post here at least twice per week, and one of the videos will be following my journey on my public dividend portfolio. Let's hop right into it. So our portfolio is currently sitting at $29,753.70. Market has been kind of iffy lately, and we got a big week ahead with CPI data coming out and the Silicon Valley Bank collapse and just everything going on. We got a big week ahead. So we're down about $150 on Friday, which is about 0.5%. In the past week, we were down about 2.88%, which is about almost $900. Let's go over to SPY. I do like to compare how my portfolio does against the S&P 500. So we were down 2.88% in the past week, and we're going to see exactly how much SPY was down in the past week, just to compare. So SPY was down about 4.42%. So we did outpace SPY, and that is probably from my options trading, which really helped out this week. So we did place two covered calls, one on Ford and one on Intel. We did have to buy the one on Intel back because again, for the second week in a row, it was almost hitting our price. So let's scroll down here. Here we go. So we received $8 from a covered call roll, and then we did have to buy it back for $11 because it almost hit our price target. It wound up not hitting it again for the second week, but we wanted to be safe, so we did buy it back. And we'll see. We're going to sell another one this week to see what we get. But the one we sold another one on Ford. So we have one from Ford for last week, and we rolled it over to this week here. So I believe we received $3 from this Ford one here. $4. So we received $4 for this. So this is 4 cents, but it's an option. So that's times 100 shares, which is $4. So that's pretty good for my Ford ones. Usually we get like $1 or $2. So $4 is not bad. And that's for this upcoming week. That is a $13.35 covered call. Let's just go back to Intel, and I do want to just take a look and show you which covered call I am looking to purchase, or looking to sell rather, for Intel. So we have covered sell, expiration of March 17th. So the current price is $27.17. We will probably be up here in the $29 range or so. So we'll be looking at either $28.50 or $29 range. So we'll be looking at either $18 or $11. It may go a little more conservative in hopes that I won't have to buy it back. So let's just take a look at that. And let's go down to the delta. So it's about 0.15, which is like a 15% chance that it will reach that price. So pretty good odds there. Let's take a look at the 28.50 one. It's about a 0.22, so about 22% that it will hit 28.50. So we'll probably do the more conservative one of 29. We'll see what Intel opens up at and see what the price of these covered calls go to. But to go further in, so with Realty Income, it's been having a tough week here. Let's take a look. So we do have currently 65 shares of Realty Income. In the past week, it's down almost 5%. And we are now down about $275 on Realty Income, which is about 6.4%. And that is mostly just from the last week or so. Realty Income, anything below $60 is an absolute steal in my opinion. So we may be looking to take this a little bit more and maybe pick up a few more shares of Realty Income. We could see, hopefully, we'll see if it gets below that $60 mark, which would be really awesome. My average cost right now is just sitting just below $66. So that would be awesome to see if it gets below that $60 mark. So keep an eye out for that one this week. Also take a look. So the market in general had a pretty rough week. Bank stocks, we could look at JP Morgan, had a pretty rough week because of the Silicon Valley Bank. And I'm sure we will see a lot more bank stocks having another rough week. So in the past week, JP Morgan itself is down about 6.6%. I'm still up on the position, about 8.5%. And JP Morgan was not even the worst one out of them. Let's go over to Bank of America. Again, not one of the worst ones either, but this one took a bigger hit than JP Morgan, down about 11.3%. So take a look into some of these big bank stocks. They're not going to fail anytime soon. These bigger names, it's very unlikely. I'm sure there will be some more bank failures. I'm not going to get into too much about that, but these big names, Bank of America, JP Morgan, they're not going to be failing anytime soon. They may go down in share price, which personally I think you can take a look and potentially buy more. But let's hop over to the spreadsheet. Now, we did get a dividend from Microsoft before we go over to the spreadsheet real quick. We got a dividend from Microsoft for $3.41. So that one got reinvested. So we got that right here, $3.41, and we're able to buy another 0.01 shares of Microsoft. So I do still only have a little over 5 shares of Microsoft, but hopefully over time this one will grow as well. I don't want to add to anything right now unless it gets below my average cost, because I do think the market is in a rough spot, and I do think we will be coming lower in the coming weeks and coming months potentially. Now let's hop over to the spreadsheet. So we can see here my cost basis sitting at $30,500 or so. My market value is sitting at $27,718. I'm down about 9% on this position. My dividend yield is sitting at 4.9%. Yield on cost at 4.46%. So my annual dividend income is sitting at about $1,357.25, which turns into $113 monthly, $26 weekly, and $3.72 daily. So let's hop over. We will take a look at the diversification again, just how with the market fluctuations. So now realty income is sitting below 15%. We have Starbucks at about 11%, so gaining some ground there on realty income. Intel's going back up a little bit, so sitting at almost 10.6%. Obviously, my position is way too large, and Intel was way too large from the beginning, and I am paying the price for it. SCHD sitting just under 6%. This one has gone down as well in share price, so can look to buy more of SCHD. Let's just hop back over here. I just want to pull up my position in SCHD real quick. So I do have 22.6 shares of SCHD, and I'm down slightly on this position. I'm down about 2%. And SCHD is currently sitting at $72 a share, and that's pretty decent price. Anything under 75 for me is a really good price. And as you can tell, it's getting back towards those September, October lows. And we'll probably see those numbers again. If I had to guess, I would think we would see those numbers again. If we could get down, if we could see SCHD under $65 a share, that would be incredible. And now obviously we have the COVID lows where it was at, sitting at like $40 a share. I don't think we will get down to that level in SCHD. But under $65 a share, I think is definitely possible. And I think we can definitely see that. And that would be great buys for me, at least. So going to my covered calls, as we can see here. Now, because I had to buy back that other one, I'm only up $1 in March. So I'm having some trouble here selling the covered calls. I'm probably not being conservative enough with my choices here. So maybe I will start being a little more conservative. We're having a very lackluster month for covered calls, sitting at only $1 in profit. But we are up about $124 in profit for the year so far, which is not bad considering that the market was pumping a lot earlier on in the year. So that in the first 3 months, I received an extra 0.4% just from my covered calls, which I know is not fantastic. It's nothing. But I'm only selling covered calls on 2 stocks. And if we multiply that 0.4 times 4 for the rest of the year, we'll get an extra 1.6% just on these 2 stocks alone. So it's really not too bad to see, in my opinion. It's extra income plus the dividend income that we're getting. So why not take advantage of that? But that is going to about wrap up this week's portfolio update. If you guys have any comments, please let me know down in the description in the comment section below. Make sure you leave a like on the video. I have a lot more content coming out. Stay tuned. We do have a course coming out, which I will be announcing in the next video. Don't worry, the course is going to be 100% free, and it will be here on YouTube. So stay tuned for that. Make sure you subscribe, turn your post notifications on, that way you get notified and you can figure out about this course. I think it will be very valuable in general, and there's no reason not to watch it because it is free. It will be here on YouTube, and this is just a thank you on my half that I am making this course. It will be several parts, so I will be announcing that in the next video, so stay tuned for that. I appreciate you all for watching, and I'll see you in the next one. Peace!